Hi, and welcome to this brief section on momentum and trend following. The two are slightly different, so we wanted just to give you a beginner's view of really what momentum is, because if you're new to investing, you probably heard the term a lot, but you're not quite sure how to define momentum. And obviously, that is positive price action and something that rapidly appreciates. But how really is it defined, and how do you use it to your advantage and using it on iView markets? So, the first thing is momentum is one of the investing factors. And so Fama and French, two PhD um, well-known, well-regarded investors have come up with three factors of investing. Actually, momentum was not one of them, but uh, later on, many scholars, PhDs, and investors like a Cliff Asness from AQR have added momentum as a factor. Now, the factors, and you might have heard the term smart beta or multi-factor portfolios, use all basically the same type of factors when investing for different rules. And they are momentum, value, which is fundamentals, quality, which is earnings or profitability, size, which is market cap, and risk, which is volatility and beta. And they use certain rules applied to these factors when designing a portfolio for whatever their objective is. Now, in terms of momentum, there is really no there's well documented information that as a strategy it does work, but there is no theoretical explanation on why it actually works. And in theory, momentum is buying stocks that are currently working and that, based on a look back period, let's say the best performing stocks on a 6 month or a 12-month basis will continue to outperform the stocks that are lagging over a 6 or 12-month period. And there could be a lot of theories that the fundamentals are supporting rapid price appreciation, or stocks are becoming crowded with a herd mentality, and shorts cover those positions and investors crowd into positions, and until they break and reverse, which is known as momentum crash. So there are some real risks with momentum investing, because momentum investing does bring greater volatility, and if it's not done in the right time frame, you could potentially have a momentum crash and give back most of the gains, or if not, have significant losses. So let's take a look at how momentum is actually viewed within the investing world. All right, so you have two basic concepts of momentum. You have relative, which is compared to a benchmark or a moving average. So for example, if I want to buy the stocks that have the greatest return above the S&P's last 12 months, that is relative. Or if I want to buy the stocks that have the greatest return above their 50-day combined with their 200-day, that would be relative to a moving average. Then you have absolute. Absolute is whether or not it has a positive or negative return over a 6 or a 12-month look back. Now, most momentum investors use 12 and a 6-month look back. And some matter of fact will blend those together. And we use more of a blending approach on iView markets. Now, a gentleman that many may know, Gary Antonucci, he likes using something called dual momentum, which combines both relative and absolute. So how would that look? Well, he would grade the relative strength And he may also then say, look, I can't buy any securities that don't have a positive return over a certain look back period. And that might help more with the risk management during certain periods of heightened volatility like a 2008 or a 2000. Now, I will show you why you don't necessarily need that if you're using iView markets. And there is no holy grail when it comes to momentum investing. At the end of the day, every momentum investor is basically using some type of blend. Now, there are some different techniques that you can use that we'll get into in another video that's a little more advanced. So let's just take a look real quickly. Now, the way we grade momentum for iView markets is on a 0 to 10 scale. These are not buy and sell signals. We're just grading the momentum strength. Now, for example, what we do is we look at the short-term, medium-term, and long-term trends, and then we give the least amount of weight to the short-term trend because that is not as important as the medium term. And the medium term trend is not as important as the longer term trend. The longer term trend is the most powerful. And then what we do is we look at how much that stock is above or below its shorter term moving average, above or below the medium term, and above or below the long term. Additionally, we don't just use a moving average in each criteria. We also use the rate of change. That helps to also smooth out the momentum as well. And then what we do is we come together and we grade all 3 periods for a final score and a quartile to get from 0 to 10. Now let's just take a real quick look at the site, and we will see that what we like to do is use a trend following approach with the Renko ATR in conjunction with the momentum. So once we start to break out, we want to make sure that the momentum, which is a little bit longer term than the Renko, is breaking out. Now obviously this already broke out a while ago. And remember, everything that we do, past performance is not indicative of future results. Trend following and technicals are not predictive. They're reactionary. They only can look at all known information that is seen in the market today. So there are no high probability setups in terms of trend following signals. In terms of trend following, you let your winners ride, and the losers you sell as they break below the Renko. It's really that simple. And it's a much different strategy than buying and holding based on fundamentals, which is longer term. Now, let's take a look. And typically, you'll want to see the rating value, or not the rating value, the technical score increase. Now this is interesting. Hasn't broken above the ATR yet, but we were at a 3 and you had a really nice big jump up to a 6. So that's something that you want to watch and put on your watch list. Okay. Additionally, you can come into your watch list and add it here. And you can also keep track of it. It's very important. So you can see it here as well with the Renko ATR. This is obviously a different stock, but all right. So if you have any questions, please contact us. We'd love to help you. Thanks.